welcome to your daily mobile game sizzle with me, Jon Jordan. Today we are comparing two companies, so Zynga and Glu Mobile. The reason we're comparing them is they have lots of similarities. So they're both based in San Francisco, they are both listed on the NASDAQ stock exchange, and they both generate their cash from free-to-play mobile games. But obviously there are some differences between the companies as well, and looking at these similarities and differences shows some interesting trends. So the first graph we're looking at is a very simple one. This is just quarterly revenue. It should say GAAP revenue, so that is the standard accounting practice. So going back over 3.5 years, we can see in red we have Zynga's GAAP revenue, and in orange we have Glu Mobile. So the first trend to look at is if we look in 2017, both of them are experiencing increased revenue. So both of them are in turnaround mode, I guess we can call it. They've not had the best of times over the last couple of years, but things are improving for both of them. If you look back at 2014, Zynga is still by far the bigger of the two companies. But in 2014, Zynga's quarterly revenue was about 4 times bigger than Glu. Now it's about 3 times bigger than Glu. As we say, both of them have been increasing their revenue recently. Glu, as a smaller company, has been increasing it kind of at a quicker rate. So the big game for Glu has been and still is Design Home, so an interactive design kind of game application, social application. And the big game for Zynga at the moment is CSR Racing 2. Both of them are generating about $100 million of revenue a year. But because Glu is the smaller company, the impact of Design Home has been bigger for Glu. So we've had a look at quarterly sales. Let's go in and have a look at something that really matters, profitability. So this is the profits, again GAAP profits of each company over the same period of time. Again, we have the same colour scheme, obviously. So we have in red, we have Zynga. So saying they've both been troubled in recent years, and we can kind of see this particularly from Zynga's point of view. So back in 2014, it was losing a ton of money. And we can see in 2015 it actually had a profitable quarter. Suddenly it zooms up, makes a small profit, and then what happens, zooms back down again. So kind of with Zynga you're having this kind of slightly kind of yo-yoing effect. The good news now is since the middle of 2016 we see losses have been declining, and now in 2017 it is profitable again. Again, a small profit, $5 million, but nevertheless a profit. And things seem to be heading in the right direction for Zynga. Partly this is because it had a new CEO start in 2016. So there are other factors as well, but partly it's this new kind of, there's a internal rigor in terms of cost base, and also the launch of the game CSR Racing 2, which also incidentally happened in the summer of 2016. So that's all driven profitability up. Glu's history of profitability is a little more interesting. So we can see in 2014 actually it was profitable for the year. So Glu's big game back then was Kim Kardashian Hollywood. It still is a fairly substantial game for the company, although obviously much smaller than it was then. So its lifetime revenue is about getting on for $200 million. Gives you some idea of the scale. Basically what happened in 2014, Glu was profitable to a small extent. 2015 you can kind of see it was kind of some quarters, 2 quarters made kind of break-even type profit, and 2 quarters was loss-making. 2016 we can see basically a disaster. So we can see just losses increasing, and actually in the middle, in the 3rd quarter of 2016, both Zynga and Glu Mobile had losses of getting on for $40 million, which is not what you want to see. And then Glu, what's been interesting to see is Glu has increased or decreased its losses. So we can see into 2017 the losses have declined, but they're still fairly substantial. So they're still getting on for $25 million of losses a quarter, which is quite a lot for a company the size of Glu. It only has getting on for like $60 or $70 million of cash in the bank. So obviously these are to a degree accounting losses. It's not losing that cash every quarter. But the kind of quandary really for people who would buy shares in Glu Mobile, the shares have gone up much more than Zynga shares, I have to say. Both companies' shares have increased over the last year. But Glu is still struggling with profitability, even though its sales are increasing at a higher rate. Partly that is because it's spending marketing money on promoting Design Home, its game that's doing very well. So it sees that as a kind of investment in the future. It sees, we spend money by getting people to download this game, and we know that they'll spend money over 3 months, 6 months, a year. So that's an investment, and that will probably be the case, but it just means at the moment it's not profitable. And we can see that in a more detailed way when we look at cash flow. So similar to the GAAP profitability, but looking a bit more detailed in terms of accounting methodology, this is the cash flow from operations. So basically what the kind of company operations are doing. So again, we can see that back in 2014, actually Glu was kind of doing its yo-yoing, but on a slightly different level. So some quarters had quite big effective losses, so the company was having to spend money to fund operations. But other quarters it was kind of more break-evening. Again, for Zynga in 2015, you see this big kind of a disaster really getting on for losing $50 million. Partly this is kind of for historic reasons we won't go into now. But we can see what's interesting about cash flow really is it kind of acts as a precursor to profitability. So we can see for Zynga in 2016, it was quite strongly cash flow positive from operations. So even though it wasn't GAAP profitable during that year, we can kind of see for 3 of those 4 quarters, there's quite a strong upward trend. Start of 2017, it dropped back, so it was the company had to fund operations. But then again, this other yo-yo, and now for the second quarter of 2017, which was its first profitable quarter for a while, strongly cash flow positive from that point of view. And that's for 2 reasons really. Costs have been stamped down on, so costs for the company are down, so it costs less money to run Zynga, and now it has this hit game CSR Racing 2, which is generating not enormous sums of money, but as we say, about $100 million of revenue a year. So that's something that's happening within operations, and that's providing cash flow for the rest of the company. When it comes to Glu, again the picture is a bit more difficult. So in 2014, we mentioned before, Kim Kardashian was its big hit, so generally things are positive there. In 2015, things kind of go into decline, so it's using up its cash to fund operations. 2016, actually, again wasn't awful, wasn't as bad as its profitability figures suggest, but it was still, at best, it was breaking even, and in other quarters it was having to fund itself. The particular reason that Glu has a problem in this respect is a lot of Glu's games involve outside licenses. So obviously, to make a game with Kim Kardashian, you have to pay Kim Kardashian, and Glu has made games with Britney Spears and Katy Perry and people like that. Has a game with Taylor Swift coming out. Also does games with the Major League Baseball, and has just signed fairly recently a deal with WWE Wrestling as well. So when it signs these deals, it has to pay the companies. Obviously, you have to pay when you get the games out and it's making money, but equally you have to pay money up front. So when Glu kind of has this negative cash flow from operations, it's partly because it's paying out for royalties, which is, in a sense, it does that because it hopes having games based on IP are going to do better than games without IP. So it's just kind of part of the way it operates. But that, in particular, we can see at the start of 2017, the first quarter there, the cash flow to operations, so that effectively the loss was over $25 million. So effectively, it was paying that out from its cash reserves to keep the company going. Things are heading in the right direction again, as we said. Design Home is doing well, but partly again because it's paying out for this marketing cash that comes out of cash flow from operations as well. So on these levels of profitability, Glu Mobile we'll say it's investing. It's kind of jam tomorrow, and it probably will be jam tomorrow, but until we have the jam tomorrow, it's still a case where we can see there is some trouble there, and depending on whether you think that's fine, it's really good, sensible to invest money when you're not making profits for the future. Some people are very bullish about Glu. I'm not. I wouldn't say I'm bearish about Glu, but I wouldn't see it at the moment as something I would invest in, just purely because I really want to see, particularly on costs, I want to see a bit more work happening on costs. So our final graph, and this is actually normalized, so this is not absolute figures, but this is looking at cash. So effectively the company's cash and equivalents, the accounting figure for it. So going back over the same period as the other graphs, we've normalized it. So we looked at Zynga's cash at Q1 in 2014, and we called that 100%, and then we looked to see how the cash kind of changed during that period. So we can see in 2015 the cash increased, and where we are now in second quarter 2017, basically the cash is exactly the same as it was in 2014. So partly that is because Zynga has spent a bit of money. So recently it spent just under $50 million buying a company, or buying a game, actually, Solitaire. So it has that cash. Companies have cash to fund operations when they need to, when they're loss making, when they're investing, as Glu Mobile would say, investing in marketing. Also, they have that money to make acquisitions, to take advantage of situations, buying companies or potentially hiring people, or acqui-hiring, whatever you want to, however you want to break it up. But for Zynga, basically, not a lot has happened. The big thing with Zynga is it has a lot of cash. So it has over $700 million of cash sitting in the bank, or effectively invested, and it has basically that money that it needs if it wants to invest heavily in a new game, or in CSR Racing 2, or buying other companies. But it has a lot of headroom. And that's kind of what you'd like to see in a company. Certainly, when I'm investing, I should say, I have very small shareholding in Zynga, and the reason I have that is Zynga is now profitable. Its shares are growing. Its revenue's growing, and it has a lot of cash in the bank. So it's not to say Zynga shares won't go down, or Zynga won't go bust at some point in the future. But those are, I think, three very key fundamentals for investing. And I should say I'm a long-term investor. I don't buy and sell shares on a daily basis, not a day trader or anything like that. So when I do buy even small amounts of shares in companies, I like to hold them for a long time. So that's why I like Zynga. When it comes to Glu, we have this quite more radical kind of curve going on with its cash. So we can see, again, we've normalized the cash it held in Q1 2014. And we can see it kind of went up in 2014, so the cash it almost doubled its cash there. That was partly because Kim Kardashian was doing very well, the game. And then we can see at the start of 2015 there's an explosion, so it's kind of totally broken through the my graph. That came about because Chinese company Tencent invested $126 million in Glu, so it created some shares, and Zynga became the biggest shareholder in Glu. What's kind of more worrying about this, from at least an historic point of view, if maybe not a forward-going point of view, is that Glu had all this cash, and we can see from a peak in 2015, it's basically reduced down. So looking at our normalized graph, the cash it has now is it's still double what it had at the start of 2014, but it's basically used up all the cash it got from Tencent. Now it's used up some of those things in bad ways. It did a lot of licensing deals that didn't work out. It's done a lot of restructuring. It's done equally. It's done quite a lot of acquisitions. So it's bought quite a few companies. And in fact, its success at the moment, Design Home, came from buying a US company called CrowdStar, and that CrowdStar deal now seems genius. So it spent just over $45 million for this company, CrowdStar, and it got two games from that. It got Design Home, which hadn't been released at that point, and which we now know is a $100 million a year franchise, and also had another game called a fashion game. What was it called? It was called Covert Fashion. That's right, and that's not quite as big as Design Home. That's a 3 years old game, but it's still generating a decent sum of money. It's a profitable game. So Glu Mobile spent, $46 million of its cash, but that was a good investment. So it's not to say Glu has wasted all this money. It hasn't. But the problem with Glu is it doesn't have so much money. So at the moment it has about just under $70 million of cash, which is fine. And it promises by the end of the year it will still have $60 million of cash, which again would be fine, because probably at that point it hopes it will be starting to be profitable, or at least break even. But clearly, from an investment point of view, Glu has much less cash, much less potentiality or opportunity, or whatever you want to, how you want to see cash, than Zynga does. Even though Zynga's sales are much bigger than Glu, Zynga proportionally has a lot more cash on board, and that just gives it a lot more headroom. So there we go. That's our compare and contrast between Zynga and Glu Mobile. I don't think either of them are bad companies. I wouldn't say either of them, you shouldn't invest in either of them at the moment. I would say both of them have seen quite strong share growth in the last year. So it's not to say that share growth will continue. It may well do. As we say, Glu has its Taylor Swift game coming out in November, so that will be a big potential uplift or downlift depending on how that game goes. And obviously, we should say you should never invest money that you wouldn't be prepared to lose, or at least lose some of. So investing is not a simple game. You should always spend time looking at the companies and thinking about your own risk profile. That's the most important thing. Do you have money that you just want to invest and you don't really care what happens to it, or are you investing money that you really want to see some return on? If you do want to have a return on your shares, I would probably say don't invest in games companies. They can be quite volatile. Perhaps think of doing something more boring, like a tracker or something like that. But anyway, enough talk of Zynga and Glu Mobile. Thanks for watching. This is your daily mobile game sizzle, where we like to talk about the mobile games industry and sometimes about other aspects of the games industry, and we particularly like to talk about the financial aspects. That's something that really interests me, at least. So don't forget to subscribe if that's something that interests you as well. But thanks for watching, and we hope to see you again soon. Hello, and thanks for watching to the very end of the video. If you have any comments, please put them in the comments box. We love to read your comments. Don't forget to subscribe, and here are 2 of our other videos we think you might like.